Good morning, everybody. Hope we're doing really good today. Welcome back to the channel. In this video, we're going to talk about 5 of the best performing Dividend Aristocrats for the past 5 years. We're going to look at their price performance, their dividend information, how they performed over the past 5 years. And if we can learn anything or get some sort of lesson out of how these companies performed and how we can be better investors in the future. If you're new to the channel, I'm Justin. I like to talk about dividend investing, financial independence, income from options, and document my own journey towards financial independence. So, if you get anything out of this video, I'd really appreciate a thumbs up and subscribe to the channel if you haven't. I'm putting out videos every Monday, Wednesday, and Friday. And so, let's go ahead and look at these 5 stocks. Now, these 5 stocks do have a couple things in common and how they benefited with the COVID-19's environment that we're living in these days. But they've all performed really well, beating the SP500 for the past year and for the past 5 years, especially when you count dividends reinvested. So let's go ahead and look at these 5 stocks, all right? First stock we have on our list is Walmart. Walmart has been, a lifeline for America right now, with being a one-stop shop where people can go get groceries and all their home supplies and everything that they need. For the past year, it's returned 20%, 20.75%. Its dividend yield has a low yield of 1.5%, low payout ratio of 40%. It's been growing the dividend for 2% a year for the past 5 years, but it's been growing that dividend for 47 years. And if you would have invested $1,000 into Walmart 5 years ago, today you'd have $2,666 with an average annual return of 21%. Next we have Abbot Labs, and it's probably pretty clear how they've benefited. They sell generic pharmaceuticals and medical devices. Their 1-year return is 35% from a year ago. It has a low yield of 1.27%, low payout ratio of 40%, and there was a spin-off where Abbott Labs and AbbVie, they separated. So Abbott Labs is they do the generic pharmaceuticals and the medical devices. So the dividend growth looks a little funky on this because there was that spin-off back a while ago. And it's been growing its dividend for 7.7% a year for the past 5 years. And if you would have invested in Abbott Labs 5 years ago, you'd have $2,589 today with an annual return of 21% a year. Next is Target. Kind of in the same boat as Walmart, as being one of those one-stop shops for everybody that you can get like most of anything at. Its 1-year return is 44%. Also has a low dividend yield of 1.7%, low payout ratio of 37%. It's been growing its dividend about 6.5% a year for the past 5 years. But it's been growing that dividend for 52 years. And if you had invested your $1,000 into Target here, you'd have $2,374 with an annual return of 19% a year. Next we have Clorox, and they make like the home chemical cleaning supply stuff. A lot of people staying home, a lot of people cleaning their house. 1 year performance of 44%. Low yield of 2.8%. I think this might be the highest yielding company on our list. Payout ratio of 55%. 5-year growth rate of 6.8%. But it's been growing that dividend for 43 years. And your $1,000 here would fetch you $1,917 with an annual return of about 14%. And our big winner on the list is Lowe's, where you go get your paint and your drywall and your tools and your home improvement stuff. This has earned 50% from a year ago, and this is the highest 1-year performance on our list. Its yield is 1.43%, low payout ratio of 28%, but but it's been growing that dividend really high, really fast at 20% a year. And it's been growing the dividend for 57 years. Your $1,000 into Lowe's would give you $2,415 today, with an average annual return of 19.39%. Now we can learn a few things from these stocks. All 5 of them, they don't have high yields, but they have been growing their dividend consistently over decades. One thing to take out of it is just not get carried away with yield. There's some companies, one that I like to pick on is IBM, has a high, like 5-something% yield, and all the dividend growth rate and the payout ratio and stuff looks nice. But if you would have invested your money like 10 years ago into IBM, you wouldn't have made any money because the price appreciation isn't there, and it's ate away at all that compounding dividend return. Another one is AG&C. That thing kind of steadily goes down and cuts its dividend. So I don't know how people think that like its high yield is going to make them any money in the future. But if you find a good company that's paying a dividend, even though it's a lower dividend like 1.5–2%, you invest your money in that. And then after 5–10 years, you can have a lot of money, especially if the price appreciates a lot or above average, like, 15% a year or something like that. All your dividends are consistently buying new shares that are going to grow even faster in the future. A good example is Microsoft. I bought Microsoft in 2013 and I spent $2,000 on that. And today, Microsoft pays me out $155 in dividends. So that's like a 7.8% yield on cost. And essentially what a yield on cost is how much income I'm getting today versus how much money I put in on it originally. So if we need like 10 years before we need any of this money, let's not get too worked up on the yield. It may be a better idea to get just a quality company, reinvest those dividends, let the price appreciate, and we might have a lot more money in the future. You could also say that past performance doesn't guarantee future results, and that all these companies that I've listed, if they've had a pretty big run and they may be due for a correction now after such a big run. So none of this is financial advice. You got to do your own due diligence, and do your own research and do whatever you want to do. I'm not your mom. I can't tell you what to do with this stuff. But hopefully we can learn something from this video. If you did learn anything, go ahead and give me a little thumbs up. I'd really appreciate that. Subscribe to the channel if you haven't. And then leave a comment down below. If you've invested in a company with a low yield, but then after time, it turns out to be, a really high yield after 5 or 10 years. Then I'll put some videos over here that we can watch. And I want you to go have a good day, all right? Justin out.